Tariff matching by Canada creates a chance to tilt TFSA exposure toward TSX financials that can absorb the hit. This is Modern Investing Techniques, episode 146. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. The S&P 500 closed at 7,674, up 0.4%. The Nasdaq Composite closed at 26,180, also up 0.4%. The TSX Composite closed at 36,620, up 0.7% and more than 250 points. Banking and mining names led the Canadian advance, while investors set aside fresh trade tension. The portfolio sits at $277 cumulative across 52 trades, with matched window alpha of negative 1.7% versus the Nasdaq, across one rules-based trade. Rate decisions and earnings remain the next focal points. With the broader tape stable, let us move to today's simulated trade and how we are applying Catalyst rules right now. Judging a fintech stock before purchase starts with two core checks on revenue quality and competitive moat. Durable fee income matters more than one-time gains when tariff friction can raise funding costs. Screen for companies whose net interest margin or take rate stayed steady through the last two rate cycles. Compare that margin against the top three peers using quarterly filings. Historical data shows this filter worked best in 2022 and 2023 when rate volatility exposed weak balance sheets. The main risk is overweighting headline growth while credit losses appear later. Pull the last 4 quarters from your broker screener or the SEC Edgar database and run the comparison in under 10 minutes. Before we see how that plays out, here is what yesterday's energy policy trade taught us. This is a simulated trade for educational purposes only. No real money is involved, and this is not financial advice. The pick is Microsoft on the Nasdaq. The catalyst is the confirmed arrival of first production NVIDIA Vera Rubin chips at Microsoft data centers. Price action sits above the 50-day moving average, with volume near the 20-day average. Nearest support rests at the 20-day moving average. A 6% stop loss caps the maximum loss if rollout news fades. The target range is 3 to 6% over 5 sessions. Confidence is medium because the catalyst is confirmed, yet sector rotation into broader tech remains uncertain. The invalidation trigger is any public statement that the Vera Rubin rollout timeline slips beyond the current quarter. This pick shows how to turn a single executive quote into a rules-based entry while respecting the volume filters we already have in place. We will track the position through Friday. Last week's hold was QEC.TO, entered at 27 cents on the Monday open. The position exited at 26 cents on the Friday close for a loss of 3.7% or $37 on a $1,000 position. The Nasdaq gained 0.4% over the same window, producing negative 4.1% alpha. The catalyst produced no follow-through once broader market volatility took over. The catalyst produced no volume confirmation. That loss highlights why we keep the full record transparent. Let us look at the updated scoreboard. The rules-based record began on August 18, 2026 under fixed 5-session holds with entry at the next open and exit at the stop or horizon. 52 traded sit on the board with a 54% win rate and cumulative profit of $277. Average return per trade is 0.53%. The matched window alpha versus the Nasdaq is negative 1.7% across one rules-based trade. The sample remains too small to call an edge, so this is still a scoreboard rather than evidence. That same cycle-aware thinking appears in our next segment on sector rotation. Imagine you added a broad TSX ETF last month when tariff headlines first surfaced and your order filled at the open. The actual path from click to fill involved the ETF's underlying banking and mining holdings repricing faster than the index average because those sectors lead early cycle rotations. Sector rotation works by matching economic phases to historical outperformers. Financials and industrials tend to lead in early expansion. Defensive, such as utilities and staples, hold up near peak. Energy and materials often bottom first in contraction. Use the yield curve slope, PMI readings above 50, and same-day volume above the 20-day average before sizing. In a post-COVID economy, the pattern can compress because fiscal stimulus overrides traditional cycle timing. Recheck the yield curve and PMI signals every quarter before rebalancing. To put these ideas into action, here are 2 tools worth testing this week. Unusual Whales surfaces real-time filings on stock trades by members of Congress and lets users set alerts for specific tickers or sectors. Canadian investors can cross-reference those moves against TSX names that also trade in the United States to spot potential institutional flow. The free tier covers basic alerts, while the paid subscription adds full options flow. The Anthropic S1 filing shows a 15-day minimum between confidential and public prospectus stages before a roadshow can begin. Investors tracking pre-IPO names can use that calendar trigger to prepare watch lists and position sizing rules in advance. Finally, a few quick items crossing the wires today. Canada's main index advanced more than 250 points, while trade talks with the United States remained unresolved. Banking and mining sectors absorbed tariff headlines better than expected. Add XIU to the watch list for any close above the 50-day moving average. Ethereum climbed back over $2,500. The move restores a key psychological level for crypto exposure inside registered accounts. Hold CAD cash for now, with no rotation signal yet into crypto ETFs. Pender Growth Fund reported $7.24 million of net income for the second quarter. The result shows small-cap growth funds can still deliver positive earnings in a tariff-heavy environment. Watch for a retest of TSX 36,500 before adding small-cap growth exposure. Roots Corporation agreed to go private in a transaction that hands control to a US-led brand accelerator. Trim any remaining root.to position on the next uptick to redeploy capital. Before we wrap, open your brokerage app, pull up the 20-day average volume for one TSX financial stock you own, and compare it to today's volume. If today's print is higher, note the price level as a potential rotation entry point. Tomorrow I will check whether the Microsoft catalyst is holding and whether volume confirmation appears on any TSX financial names. That's modern investing techniques for today. If you found this useful, share it with a fellow investor and subscribe wherever you listen. Check the resources page for tools and platforms we discussed. We're back tomorrow. Keep learning, keep investing. And if you'd rather watch than listen, find us on YouTube at Nara Network. Links in the show notes. One more thing. If you liked today's episode, our sister show, First Principles Daily, is worth a spot in your feed. Reasoning from raw materials, not analogy, on the breakthroughs that actually cut cost. It's one of the Nara Network's daily briefings, all free at naranetwork.com. Prefer reading? Today's full write-up, sources, and transcript are on the episode blog at naranetwork.com. Same briefing, readable format. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about